Very good morning, guys. Yesterday, the market walked straight up into the resistance, and the resistance did not break. We opened at 23,984, touched to 24,011 in the first few minutes, and then spent the entire day sliding back to the close at 23,853, up 231 points, almost a percent green on the screen, but a long way below where we opened. That is not market breaking out, that is a market running into resistance. And yet underneath that quiet fade, the one thing I have waited for weeks to finally happen has happened. The FIs that would not stop selling turned around and bought some equity. Today is the expiry, the line is 24,000 and the buyer is back. This is the Tanmay Edge. You are listening to episode 61. I am Tanmay Gurdoti. Let's go. Quick scorecard before we proceed. Episode 60 came out and 3 out of 5, that is the score what we are grading it. The 24 resistance call was the cleanest read of the week. I told you the level caps the first test and you sell a piece into it, and the price tagged 24,011 and got rejected to the tick. Where I learned too hard was buying the dip for a push through 24,000 because the day faded instead. Full breakdown is present on rupeecase.com. Hold that in your head because today is what it matters. Now yesterday's tape, because it sets the board for today's expiry. We gapped up 360 points yesterday into the round number, and the sellers who defended 24,000 went to work. By the close, we had given back 158 points from the high. The Sensex did the same, ran to 76,821 and settled at 76,264, up 0.97%. The strength sat where it has been all week. Autos led. Trent ran 5.35%. Maruti and Mahindra both up over 3%. L&T close behind. Banks and capital goods names were firm. The laggards were the defensives and the tired power pack, with NTPC down 1.64%. So the rotation is still on risk on, just exhausted at the resistance. Here is the part that changes the story for today. For 2 weeks, the FI desk was the only seller in the building, short 2.5 lakh index futures, refusing to cover. Yesterday it blinked. In the cash market, the foreigners turned net buyers of 143 crore. The DIs added another 2,875 crores, and in the futures, the same desk bought back 23,371 contracts. The trap short is finally getting covered, and a short that covers is not a seller. It is a buyer in disguise. It has to buy to get out. That is the fuel under this tape, and it is exactly why my read has not changed. You still buy the dips. The overnight tape also agrees with me. Wall Street ripped while we slept. The Nasdaq was up 3.07% and S&P up 1.65%. A clean tech-led surge that we saw. Crude, the thing that started all of this, has gone quiet. Brent is sitting at 83. No fresh war headlines. No spike. Peace holding for now. The rupee is firm and below 95 mark and trading at 94.71. And the US 10-year is at 4.48. And Gift Nifty points today to an open near 23,930. Right back under 24,000 for a third straight run at resistance. And one thing to watch, our IT pack was the lone red sector yesterday, and the Nasdaq jumped 3% overnight. That laggard could be a today's surprise buyer as well. Keep a watch on that. So late on the expiry board, the big resistance stands at 24,000 and the call writers did not blink. They piled another 87 lakh contracts onto it yesterday, and it now holds a record 1 crore 92 lakh return calls, by far the heaviest block on the board. That is the people who lose if we climb, parked right above us. But underneath, the old sellers keep flipping to support. The 23,800 and 23,700 are the support now, not the resistance. And the real support is far below that at 23,500, where the put writers sit on at 1 crore 8 lakh contracts. The future still holds 18 point premium, a 4.7% annualized carry, which means the bulls are still paying up to stay long. Now the numbers that matter most on today's expiry. The ATM straddle is trading near 168 points, and the straddle is the market's own bet on today's move, about 168 points either way. Lay that on the close and the implied band runs roughly, remember this level, 23,686 on the bottom end to 24,022 on the upside. That is where the option market expires this to settle by 3:30 today. Inside that band sits the switch, the gamma flip level, near 23,900, just above us. Above that line, the big option desk pins the tape and dampens the swing. Below it, the moves get amplified. So 23,900 is the hinge or the flip level where the whole day turns on. And because it is expiry, that 168 point of premium melts as the clock runs. This is a sell the premium session, not the option buy session. Remember this. So here is the plan, guys, and it is still a buy on dips plan. 3 steps. 1. Do not chase the open. Yesterday the open was high of the day, and the same day expiry punishes the chaser. Let the first excited candles settle and buy the pullback towards 23,800 down to 23,750 as well. On the sellers who flip to support with 24,000 as the first target that we have. 2. 24,000 is where you take something off, because a record 1.92 crore of written calls does not step aside on a third knock. Only a clean 15 to 30 minute hold above that 2422 zone. The next leg is 24,100, then towards that 150 where the likely expiry can happen if the breakout happens. 3. If open fades harder, the real buy zone is 23,750 down to 23,750 on the put writers support, and there is where the strong hands add. The continuation is only dead if we lose 23,700 for half an hour, because that breaks the switch and hands the day back to sellers. Until then, every dip is a buy. The simpler trade and the warning is the same in one word: expiry, guys. Volatility is cheap at 14, the buyer is back, and then that makes the chasing this morning pop-up look smart. Do not on a same day of expiry. If you buy that opening spike and resistance rejects it, you can lose half of your premium by lunch to nothing but the clock. Let the crowd pay off at the resistance. You wait for the dip and you let that time decay work for you, not against you. The honest risk is that 24,000 itself freshly reinforced a record block of calls, and a market that has already failed there once yesterday can fail again and pin us straight back to 23,800. This is a tug of war, covering buyers pulling up from below, call writers pressing down from above, and 24,000 the resistance, 23,900 the flip level, and 23,800 where the likely expiry that might happen, and the clock is running out on both. Respect it. So Tuesday's expiry in one breath, guys. Resistance stopped us at 24,000, but the seller who held this market hostage for 2 weeks finally turned buyer. Crude is quiet, Wall Street is ripping higher, the trend is up, the cover is the fuel, support is present at 23,700, the flip level is 23,900. So you buy the dips towards that 24,000 mark. Take something off at the resistance, add lower if it comes. The continuation breaks only below 23,700. Call it buy the dips expiry, 24,000 resistance trade. Trade the level, not the opinion, guys. This was the Tanmay. If this helped you read the tape more clearly, share it with one trader friend who trades and needs it right now. Hit that subscribe button so you never miss a morning podcast. Stream free on and first on rupeecase.com and on Apple and Spotify as well every trading morning at 8:30. And leave me a rating, guys. I read every single one of them. I'm waiting for your reviews. Have a great trading day, guys. See you all once again tomorrow.